Thank you for checking out Philman Roll-Up and Associates Municipal Market Update for the week of August 17th. My name is Adam Bauer, and I serve as CEO and President of Philman Roll-Up and Associates. On the first slide, what we're highlighting here is the historical MMD yield curve, and we're showing the range that the interest rates have been for each one of those maturities. Red line is near the bottom, meaning rates are very low. If you look at the one-year maturity, it's at 0.13. When I last spoke with you, it was at 0.11. So that one-year maturity has gone up just a little. I also pointed out last time we did this that the 30-year maturity had a 1.47 yield, and now it's 1.36. And the reason why that's so significant was I spent some time talking about how if you look at the increases in yield for each year, it was very narrow, so like a 1 or 2 basis point increase. But 2 weeks ago, the 29 maturity had a 1.36 yield. The 30-year maturity had a 1.47. And so that kind of gap was large compared to some of the other changes from year over year, or the differences from year over year. Now that 30 year has come down, so it's more consistent. So if you look at like the 24, 25, 26, all the way to 30, you're seeing 1 or 2 basis points difference between each one of those maturities. That trend is more normal than what we saw 2 weeks ago, where you saw a wide gap between just 2 maturities, but not some of the other ones. So certainly it was something to look at a few weeks ago, and now that more historical trend has returned. Another thing I think is important for us to focus on this August 17th period is if you go back before the COVID-19 pandemic broke out and we all realized that things were going to be shut down for a while, the green line has a higher yield than that tan line. And the green yield is the U.S. Treasury, the tan line is the AAA MMD for 10 years. And you would expect that that green line would be a little bit higher because the municipals in this curve are tax exempt for both state and federal, whereas U.S. Treasuries are the states don't tax them, but the feds still tax it. And so the fact that you don't have that double tax exemption, if investors think a AAA is really equal to a AAA, they would prefer to own the municipal because there's more of a tax advantage there. Well, look what happened the last week. That green line inched ahead or over the tan line. And this could be a sign that investors are not as worried about credit risk with municipals. We'll see if this trend holds. But it's interesting to me that has come back. And it's something that we have not seen with other than a very slight blip in June. We have not seen since the COVID-19 pandemic really took hold, and we're all aware of it in the United States. Slide 4, we're highlighting the bond inflows. And this really adds up to more than 15 weeks of inflows. That first week during the pandemic, we all recognize the large amount of outflows, but really money is flowed into the municipal bond funds. Once again, that puts pressure on interest rates to keep them lower, unless the supply equation changes. And I want to show you what happens on this next slide with supply. There's a large amount of supply coming this week. You can see those dotted lines represent the averages for the last few years. And we are way over that this week. This week, we're really testing whether all that extra demand can fully absorb the supply. All signs are that it can, but still, you're seeing a lot of transactions come to market this week. And so this week will be an important one to watch. Generally just showing the trends of the 5, 10, and 30-year MMDs, and we've been going lower, 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 and now we have this slight tick upward. And that's especially interesting to me because we also have a large amount of supply coming this week. And so now it's, where will rates go at the end of this week? We have more supply coming, so that demand may get absorbed, and so you don't have as much downward pressure on interest rates. But we'll see at the end of this week how that turns out. But we have seen a little bit of an uptick in all those 3 categories that we've talked about. Have some big economic indicators that are coming up, and you have existing home sales, consumer confidence, pending home sales. But like I've told you in the last few of these presentations is there's much bigger events out here with COVID-19, an election coming up that probably have more of a significant impact unless one of these comes in a lot different than expected. On the last slide here, we have the registered municipal advisors of Film and Roll-Up and Associates. We encourage you to reach out to any one of them for more information. I thank you for your time, and I look forward to talking with you in 2 weeks.